Welcome back to the show this morning. A couple of things here. So we're just talking about this, the burgeoning wealth gap that's been kind of going on now for the last decade. And, a lot of this can be directly traced back to Fed monetary policy, government policy. This process that we've had of allowing, corporations to take advantage of the overall population to their benefit. But this capital cronyism that we've had going on for the last decade has exacerbated this wealth gap problem. And, people are getting, even before this, coronavirus impact had occurred, people are already, this was a major talking point of the Democrats for the upcoming election was the wealth gap, the wealth inequality. That's why we were talking about modern monetary theory, which is simply just giving people money because they needed it, right? We're going to tax the wealthy more and give money to the poor people. That's socialism, by the way. But when you do that, but that was what was occurring. And here we are now, just at this moment where you were about to have a potential turn in this dynamic to some degree. It's now been wiped out very quickly and completely reset back to where it was. And so this is going to exacerbate the problem. And again, when you look at ownership of the stock market as an example, look, I know a lot of you listening to the show right now, you've got money invested. You're in a very small percentage of the economy. Now think about that for a moment. If you have money invested in the stock market right now, you're basically in the top 10% of the economy because they own 88% of the market. The other 12% is owned by the bottom 90%. That was an article out by BCA Research today. It was on the Wall Street Journal. Those aren't my numbers. That's just research. But it's pretty amazing when you think about it because this has all been part and parcel of this shift within the economy over the last few years where we have concentrated wealth at the upper end of the spectrum. And that has consequences to it because, again, when you concentrate wealth at one end of the spectrum, it slows overall economic growth. And let me explain to you why. If you gave somebody who has $10 million, another $1 million, they're going to save the money, right? They've got everything they want, right? You've already got your house, you've got your cars, you're taking your trips, you're doing everything. So if you're already quote unquote wealthy, giving you more wealth doesn't change your consumption behavior. You're already consuming at the rate that you're consuming. And that's not going to change just because you get more money. You just invest the difference. And so that doesn't help economic growth. So one of the reasons that we've been stuck at very low rates of economic growth is because of this disparity within the wealth of the United States. Despite the efforts of the Federal Reserve and of the government to implement programs and do these different things, all these programs have been designed and targeted towards the very people that don't need the money, corporate tax cuts. So it doesn't help create economic growth. It doesn't spread through the economy and lift the bottom 40% of the population into the middle class. It doesn't shift the middle class into higher middle class. It doesn't help any of that. It all keeps the wealth concentrated at the very top end of the ladder. And this is why we have this wealth disparity problem. And the programs like the Federal Reserve bailing out banks and bailing out markets, those type of things, certainly helps the rich stay rich, but it doesn't help the bottom 90% who aren't invested in those assets to any great degree. So it frustrates the situation. You continue to get lower economic growth because of more debt, a higher concentration of wealth. The poor get poorer, the rich get richer, and it exacerbates the divide between classes within the economy. And so this is where you get this rising anger from. This is where you come up, that's where you get people like AOC. And you get these ideas about modern monetary theory and that we should just give people money. And just logic itself tells you that these aren't good ideas. But why would I care? If you're going to give me money, why not? right? It's your everything else is your problem. Just give me my share. This becomes the attitude of the financial markets. And this is the attitude of the economy, which is just give me my fair share. And that's where we come up with these policies. Instead of focusing on the policies that we should be focusing on, instead of trying to solve a debt problem by issuing more debt, at some point you just have to stop digging. And this is the lesson that we haven't learned yet, which is to stop digging. At some point, you have to just let the system work. And you can't privatize the gains. You can't socialize the losses. You have to let businesses fail. You have to let the economic recession occur, as painful as it might be. You have to let it happen at some point. Now, you can try to mitigate it to some degree, but you've got to let it occur. You've got to allow bankruptcies to happen. You've got to allow debt to default. You've got to clear the decks, so to speak, so that you can reset the economic balance. But we've been unwilling to do that, right? Because nobody wants, look, I don't want it. Brent doesn't want it. You don't want it. Nobody wants to deal with the pain of it. What's frustrating for fiscal conservatives like me is that, I do the right things. Brent does the right things, right? We don't carry a lot of debt. We pay our bills on time. We work hard. We save our money. This is a vast majority of Americans out there that, are financially responsible. They really get the short end of the deal because we don't get to participate in the bailouts. Right? We don't get that part. We don't get the payroll protection checks, those type of things. It bypasses a group of people who are just financially responsible. Bailing out mortgages and bailing out debt and these other things doesn't benefit people like Brent and me because we were already paying our bills and being this. So this leads to this rising kind of dissension within the economy. And it was interesting because we keep bailing out the banks. That's a good example of this. Yesterday, I was reading an article that one of the major banks, I believe it was B of A yesterday, is tightening credit standards to the point on a mortgage that you basically have to have a 700 credit score plus almost a 20% down payment to get a mortgage. Now, wait, we just bailed you out again. We just bailed out the banks again, giving them more money, buying their debt, taking the debt load off of the banks, shifting that to the government and taxpayers ultimately, because you've got to pay for the treasuries that were used to fund that. So we've bailed out the banks a second time in a decade, but yet now they have been slow to help with the PPP program. They demanded more income from the PPP program in terms of fees and interest rates that they get paid. Here's the group of people that when they get in trouble, when the banks get in trouble, they're the first things that taxpayers bail out. But then when taxpayers turn around and go, can you give me a loan? They're basically, screw you. This is about me. So you can kind of understand this kind of rising angst that's occurring. And when people figure out more and more over the course of the next year or so as the stock market recovers and as the economy does get back on track, the rising level of angst and anger that we saw prior to this because of suppressed wage growth and suppressed economic growth and the inability for a large chunk of Americans to really participate, that anger level is going to become much more visible. Particularly as, we see people like Jamie Dimon talking about how the economy's back and everything is great and they're reporting record profit margins, whatever it is in the next couple of years when that happens. The level of angst and anger that you're going to see from the lower to mid class is going to be palpable. It's also going to shape the next election after this one to a great degree. It'll be interesting to see who runs for the next presidential candidates in 2024. It will be a socialist and a communist, most likely. Be right back after the break. Don't go away.
Follow us on Twitter @Real Investment Advice or go to realinvestmentadvice.com.